viewers who perhaps haven't paid enough attention, I wonder if you can sort of restate the concept of commerce at home and what kind of market is addressable in that space.
Yeah, it's really simple. Shopping's been moving from the store to the home for 30 years, really led by Amazon, recently with all the speed to the door, but everyone's racing to the door. We believe the opportunity is to take the entire experience through the door. The home is becoming a new platform. Airbnb turned a spare room into a hotel. Peloton turned your home into an exercise studio. We're just bringing the whole shopping experience through the door. And we do it for world's big companies that depend on deep engagement. Apple's a partner here in the U.S. They depend on deep engagement as they roll out their services platform and want to shorten the upgrade cycle. A partner like AT&T for us is trying to win not just on high-speed networks like 5G, but broadband in the home. You have to go through the door to unlock those opportunities.
Tom, I can't even imagine the number of proposals that are crossing your desk these days. What did you see that you liked here?
With any SPAC sponsor, the first thing you're looking for is a public-ready company with a really exciting business model and a great management team. So then we were introduced to Ron and to Enjoy, and initially we're like, wow, this is great. It's unique, it's disruptive, it's scalable, it's very tech-enabled, it has huge global applications. But then as we dug even deeper, we liked it even more, and primarily because the customers love it. They have net promoter scores in the high 80s, which is, and I know a little bit about customer businesses. That's incredible. The partners love them. They have an incredible management team, as I mentioned, a huge head start in what is a really logistically complicated business, and a positive unit economics and a path to real profitability soon.
Tom, I'm so curious, you got a great head start in a year when everyone was stuck at home, but as people can return to brick and mortar commerce, as we see malls really feature experiential shopping, how do you think that the model is going to have to evolve as people want to get out and about more?
I think that's really a good question for Ron.
Yeah, no, we think, as a fundamental change, commerce at home is on an inexorable march up. And people now just have to simply choose, do I want a to-the-door experience, which we'll do most of the time because we buy online for convenience. But then in the future, we now have a through-the-door experience. And just like we like to go to a great store for an experience, we'll want to have an experience at home. So we see the future being very bright for Enjoy. And it's interesting, it's a global reach. We serve 80% of the UK today as we speak with our partnership with British Telecom. We're in nearly 40% of Canada, and we're just getting started.
Tom, a question for you on the SPAC model. Recent criticism, and we heard from Buffett and Munger over the weekend, but more largely it has focused on major sources of dilution for new shareholders, on things like the warrants and the promote. How much of the IPO proceed does your promote make up? How did you think about it in this process?
Yeah, and I think it's important in light of all the everything, all the noise in the SPAC market to kind of keep all this in perspective. I mean, ultimately, this is just one financing option for companies that need to grow, companies that are looking for growth capital. They have a couple different options. It is not, necessarily the best option for all companies. It really depends on the facts and circumstances of the company itself. In the case of Enjoy, like I said, a public-ready company with a great business model and global aspirations, it really was a great fit.
Did you do anything differently? How much was your promote, and did you include warrants at that typical price of about $11.50?
I'm not sure what's exactly public, but with largely standard terms. But there were a few tweaks, but largely standard, yeah.
Now, Ron, I know that you're here to talk about Enjoy and the SPAC, but I have to ask you, since you worked at Apple for so long, about this Apple Epic lawsuit, which has just got underway moments ago this morning. How do you view this case?
I don't know much about it. I'm so impressed with Apple. They've never innovated at the pace they are. What's interesting to me, though, I looked this morning and I saw that Spotify, which has a lawsuit in Europe, has a $50 billion market cap. Epic is nearing $30 billion. I wonder how these companies would do without iPhones in the App Store. And so it's really hard to determine pricing. I've been in retail my whole life. And when you get a great opportunity with a large customer base, you're going to pay for that. And we do that through rent in a mall, through margins, all these things. So it's a very complicated issue. And it'll be interesting to see how it plays out.